So if you're on a $10,000 prop firm, you're risking quite tiny amounts, but that's fine, but just go very, very small, because just don't get stopped out, and you'll eventually, if your trading's good enough, you'll eventually get to that profit target.
Sitting down today with Andrew Mitchem, we want to do an episode specifically about prop firms and really what it takes to become a good fund trader, but also kind of scale things up and get to that next level with prop firms, to scale it up to where you can make more money trading with more capital. So Andrew, welcome back on the podcast. Good to have you here. Let's start with this. I'm sure you get people who reach out to you and kind of ask you about prop firms and how they should go about it. What's your first train of thought into when is the right time to go for prop firms?
Okay. I find that so many people tell me stories, and they're kind of horror stories. They jump in too quick. And I think people aren't doing it realistically. They jump in because they see it as, maybe I don't have enough money myself, and it's a good way of potentially earning funds and commissions, etc. But they don't have any background into trading properly themselves. They don't have a strategy they're confident in. They haven't proven themselves first. And I think that's the pitfall that too many people jump into.
Definitely. It's like trying to get capital before you are a profitable trader.
Yeah. I just tell people, maybe look at it in, 6 to 12 months time. Be real about this. Yes, look, prop firm can be absolutely fantastic once you know what you're doing. But spend some time up front to learn the process of trading. Forget how much money you make. Don't even look at money. Just understand the process of trading. Low risk, etc., low drawdowns, because ultimately that's the thing that's going to get you through a prop firm. And if you don't understand that, hitting that drawdown criteria is what's going to make you lose your money.
How do you get someone interested in the process? Because a lot of people are going to, of course, focus on the outcome, trying to get the result. How do you get them to, first of all, follow the process, but they kind of have to be interested in it and like involved in it too?
Yeah, it's a tricky one, because everybody wants the results and everybody wants the money. I suppose all I can do, is probably a little bit like yourself, is keep going on and on and on with the same story, because ultimately that's the best way you're going to get a result. You've almost got to like beat it into people, say, please don't waste your time or waste your money. Focus on the process of knowing how to trade, or just make sure you're consistently profitable. I just suggest to people that when they start, use a demo, for a reason. Be profitable on that. Go onto a small live account, be consistently profitable on that, then maybe a slightly bigger live account, and use all those, like that experience and those emotions that you're going to have, and get that right first before go onto a prop firm, because otherwise you're just spending $500 and wasting your money.
In terms of prop firm, there's a lot of choice out there. You can pick, of course, so many different names. There's ones that's been around for a longer time, some that are newer, maybe more competitive or kind of nicer offerings. How do you actually get to pick the prop firm? And I know we maybe have some thoughts on this, but
Yeah, no, it's I suppose you want to look at potentially, a company that's been around for a long time. That's always, I suppose, a good starting point. But the other one is, I like, personally, I like prop firms that have slightly bigger drawdown allowances. And there's some of those that I personally use that have 2 stages of a challenge before you go to live money. A lot of them would have like a 10% profit target and maybe like a 5% drawdown. I think that's just a little bit of a tight criteria for a lot of people. Whereas I'm now using prop firms that have maybe like a 10% profit, 10% drawdown. And then you go on to another stage where you have to maybe make like a 5% profit again, within a 10% drawdown. And then you go to real money. So yes, it might take longer, but having that bigger drawdown just allows a little bit more wiggle room for you as a trader. And I also think it's really important that people don't have a prop firm that has a time restriction. I really would avoid that. When you see these prop firms that say you've got to do this, 10% within 30 days, and then realistically that might only be, say, 20 trading days, and the market conditions aren't good every day. So, they almost force you to gamble. So I would have something that doesn't force you on a time restriction to get to your profit target, and also something allows a slightly bigger drawdown.
I think the time rule is mostly gone for a lot of prop firms. Most don't offer this. Most don't have this anymore as a rule because people were really tired of it. I think the rule that now is kind of sticking for people is the trailing drawdown. So the more you in profit, even if your trades are open but not closed yet, that counts as your highest like profit level, your highest watermark. Then the drawdown's calculated from there. So you could have a trade that runs like really fast and comes back, and then that hits your drawdown level.
Yeah, so I suppose a lot of that then comes back to, as mentioned, to try and have a prop firm that has a little bit bigger drawdown, to give you that flexibility, but also don't rush to pass it. And probably, the way that obviously everybody fails on a prop firm is they hit the drawdown and get stopped out, or they get closed. So making sure that your risk per trade is very, very low, I think, is crucial as well. Yes, it may take, let's say you're doing it on your own normal account, it might take you a month, but let's say you half that risk again and it might take you 2 months. It's like, well, really, it shouldn't matter. Just pass the thing within the drawdown is the most important point, not how long it takes you.
How do you calculate the risk per trade that you should go with? Is it based on a specific number that you always follow, or is there some math behind it, or what do you tell people to focus on?
For me, I'm just talking purely me personally. I mean, what people do is entirely up to them, of course. I personally risk only a quarter of 1% of my account on a trade. And if I split that position into two, which quite often I do, like if I'm taking a buy trade, I'll take a market order and a buy limit, just the way that I trade. I'll have like an eighth of 1% of my risk on each of those two positions. So in other words, if both positions got stopped out, I lose only a quarter of 1%. So, you need effectively four whole trades to go wrong to lose 1%. So yes, it will take me longer to get to the profit target because naturally my gains will be smaller as a percentage, but the chances of me being stopped out and blowing that account are really quite small.
I know a lot of people have this issue of they say, oh, well, of course you can do this because you have a big account, but what about guys who have a small account? They trade with maybe $10,000, might not be able to take all the trades with 0.25%. How would they go about it?
Oh, they can still do that. I mean, if you're on a prop firm, I mean, most people that I sort of speak to are slightly higher amounts on a prop firm. Um, but yeah, and look, I suppose if you're on a $10,000 prop firm, you're risking quite tiny amounts, but that's fine. 1% is what, $100. So you're risking $25 per trade on a $10,000 account. It's still the same risk percentage. I mean, I think, yeah, if you went down to a 10,000, you might have a little bit more difficulty with real accurate position sizing. But just go very, very small, because just don't get stopped out, and you'll eventually, if your trading's good enough, you'll eventually get to that profit target.
One of the beliefs people have is that the way you pass the evaluation is different from the way you should trade the account once you're funded. Like they try to pass more aggressively to kind of get the account faster. And if they fail, they don't really care about a new one. When they get funded, they go a bit slower, a bit kind of more like structured. Do you agree with that, or do you kind of treat everything the same and just follow the same stuff all the time?
I treat it exactly the same. I mean, to me, that's how I would do it. And I see why people do that, but I don't think you should. Um, One of the things I've always tried to do with prop firms is not even really look at trading. I don't trade the prop firm as such. I personally put my prop firm onto a virtual server with a bit of trade copier software, and I just focus on trading my own live account. Because if I can trade that one, on it, because the head and the heart are two things that play with people's mind, aren't they? When it goes real money, it's emotions. So why do I want to see like multiple hundred, $250,000 accounts behind the scenes? Because it starts to play with your brain. To me, it's easier to focus on your live account, or even a demo, but let's say your own personal account, and get that one trading in the right direction properly, and then have those same trades mirrored behind the scenes. I just think that's so much easier, because if I have, let's say, five prop firms, I'm not wanting to go into every single one and calculate the risk and the lot size. And it's like, oh, now I want to close part of the position, or I go in five times. That's just a pain. Um, Focus on one account, trade it properly, and have it copied behind the scenes.
That's a good point. Yeah, you don't have to look at the account. I feel like a lot of people have pressure from the fact that they're funded or the fact that they pass and then they can lose their capital. If you don't think about it, just trade the same account, then that definitely makes a lot of sense.
Absolutely. Take the emotion out of it as best you can. Because realistically, if you're on 100,000 live money, not many people are used to doing that with their own accounts. So it can really start to play with your head. So just focus on your normal account. Get that right. Just do nothing different.
Let's go to some of the common mistakes people make with prop firms. What do you see as the main ones that people make when they go for a prop firm?
Yeah, I think it's either not choosing the right one, but it's about not having their strategy sorted first. I think that's the biggest issue. It's that honestly, it's that jumping in too early onto a prop firm when, as a person and as a trader, you're probably not ready. So I would just say to people, just give themselves a realistic chance of getting it right, because you've got to have confidence, full confidence in your ability to trade that strategy before you go into it. Because, like you said, you might just fluke and get through your demo account, but when it comes to real, you start self doubting. So I just think, yeah, it's getting that confidence in yourself, your strategy, your ability to do this properly over a period of time, and then consider it.
Have you failed any prop firm accounts before?
Yep, I did in the early days. Yep, I did. And I ended up taking a few trades that were too big a risk, and they got stopped at. So I learned from that, pretty early on, that just go lower and lower risk.
It's interesting because a lot of people see prop firm as like a thing you pay and then you should get the account. And sometimes, like in trading, you can never really predict whether a trade will work out or not. So it's good to take a step back and accept you could lose an account too. You could be funded and lose it. And you just have to kind of keep the consistency and get back to it to get a new account possibly. But yeah, it's important to understand.
It's when I probably, was risking a little bit. I mean, only very, very low amount of risk, but I had multiple trades open. And like you said, they take that. I didn't hit the stop loss level, but with the open trades and the amount of open trades, it did it. And I suddenly looked at it one day knowing I was pretty safe. And I go, oh, that's so they've closed my account. And I wasn't aware of that rule. So that's another thing to be aware of. So that's why I reduced the trades, reduced the risk per trade, and ever since then, I've been fine.
What do you think prop firms are going? I think there's been a lot of change in the past few years. There's been some prop firms closing down because they had maybe bad practices. Some of the ones opening up, of course. A lot of these new ones, they kind of always try to lower the price and then always kind of try to make the rules match each other also. What do you think that's going? What do you think is going to become in the future of these platforms?
It's a tricky one. I suppose that, I'm now personally using those ones that have been around for quite some time. And I'm using ones that are associated with good brokers behind the scenes who I trade with anyway and know. Um, so those are my kind of criteria when selecting a prop firm. I know who they're using as a broker. I know the brokers are good. I know that they're big. I know that there's no issues with being able to take a trade. And I think that's probably the key. Where it's going, well, you're right. Look, I mean, we went through a stage, a couple of years ago when a whole heap of them appeared and then disappeared. There was a few issues a few years ago when some of them couldn't trade MetaTrader, then they could, then they couldn't. I think that sorted a lot of them out. Yeah, at the moment, I personally don't look at new ones. I'm not really kind of aware of who's out there. I've got my ones who I like, and I'm kind of sticking with them. And 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 I think leading on from that is that when you do find one who you like and you like the rules and your payouts are good, etc., then what's to stop you not opening more accounts? Rather than going searching for another prop firm company. You could, like, as an example, I've got a client, one of my clients in Singapore, who each week opens a new prop firm account. He's just constantly opening new accounts. And so some of them might get stopped out, but some of them will be hitting profit like now. And, and just with market conditions, you never know what's going to happen. So he's constantly going through evaluation, maybe failing, evaluation, passing, and just keeping lots of them going. And, that's his aim is to get up to $1 million pretty quickly on live accounts, and it's like good on him. But rather than having $1 million one account and, and blowing it, why not have lots of smaller accounts constantly being opened and your accumulated, totals 1 million or possibly more. I think that's another really good way of trading because you kind of then, if you do have a bad week or so, you're kind of not like losing everything in one go.
I think it's a good point, but you definitely got to diversify with different platforms too. I just wouldn't trust one platform by itself. Sure, they might be around, but they might have like some glitches, some issues with technology or something that will make it tough to trade. And having these other accounts can be definitely useful.
Yeah. And also making sure that the prop firm that you choose has the markets that you trade. If you, like as a Forex trader, yes, I now look at metals and cryptos and commodities, etc., like that. So I want to make sure that that prop firm offers those. There's no good me in my real trading saying taking maybe 20% of my trades as non-Forex pairs. And then I go to a prop firm, like, oh, they don't offer Bitcoin or they don't offer gold against the Aussie or anything like that, which are some of my, favored pairs, for example. So I think it's really important that you find a prop firm that offers what you like. Also, as an example, if you were trading, say, monthly charts or weekly charts, and you might want to leave those trades open over the weekend in your real day-to-day trading, does that prop firm allow you to keep trades open over a weekend? So it's all these extra little things that are determined by your own criteria, your trading strategy, making sure they align with their rules.
Do you have a preference for actual prop firms or sometimes the prop firms that are offered by brokers?
Yeah, there's two that I'm mostly using. I mean, I can name them if you want. So I like the Fivers. I've used them. I think they've been really, really good. And Blueberry Funded is another. The Blueberry Markets. They're relatively new, but I know the guys at Blueberry Markets as the broker, pretty well. And I think that they're good. And so by having their kind of backing with a prop firm's good. There's a number of other prop firms that are using 8 cap and they seem very good as well. So I think it's important that you get that backing of a decent broker behind the scenes.
Tell me what people can find you, reach out to you. They want to learn from you or kind of ask you questions after this podcast.
Yeah, sure. So my website's theforextradingcoach.com and we've been running for 16 years this year. So very proud of that. And, probably one of the longest companies out there. And we've got clients right around the world. And one of the things that we do is we specifically like to focus on that low risk but high reward to risk trades, because that to me is one of the keys and the secrets to getting through a profit.
Definitely. We'll put the link below in the description. People can check you out directly there. Hopefully they can learn from you, see what you're doing. You put a lot of good stuff on YouTube and on your podcast as well. And I appreciate you for what you're doing, definitely. So thank you, Andrew. Appreciate it. And hopefully people can connect with you. And yeah, we'll talk to you soon.
Brilliant. Thanks for your time, Etienne. Appreciate it.